Gang, welcome back to my channel. It's a boy Holistic Profit, representing always stock in profit. You know the drill. Alright guys, I told you guys before that there's no way you're gonna complete this series from the first episode to the last episode that you're not gonna learn how to trade the foreign exchange market. Alright, so now we are on the stage 2 of this series, and things are getting quite intensive. From the previous topic we did, that's the lot sizes, we started getting into risk management, and now one thing you want to do is secure your back end, because definitely there's going to be losses in this market. But however, the only way you can be able to determine how much you're willing to risk on a particular trade is if you know the kind of lot size to use and you know the amount of pips you're risking it on. Right, that's the only way you can build your risk management completely. All right, so now all you just need to do is stick to the end of this video, and definitely you're going to learn how to calculate pips and to calculate points as well on all asset classes, including the gold, Nasdaq, and the US 30. All right, so now stick to the end of this video, and if you gain value from this video, please like and subscribe to the channel. All right, so now let's get started. What is a pips? A pip is an acronym for percentage in points. Now this is a term used to gauge price movements in the forex market. Now you have to know something, that price moves in pips, and now these pips are being made of pipettes, but however these pipettes don't usually have much significance in your profit or losses. So it's just advisable to take into account that these pipettes actually make up a pip, and just like how we have 60 seconds makes 1 minute, that's it, the same way we have 10 pipettes making a pip. So now that is for that. Now how do we calculate these pips? Remember I said there are different currency pairs in this market, different price values. So now you want to know how to calculate these pips value across the whole currency pairs. All right, so now we have some currency pairs that have 5 digits after the decimals, while there are some currency pairs that have 3 digits after the decimals. And also we have other asset classes like the gold, and we have the US 30, the indices. So how do you calculate the pips value across all these different assets? That is what leads us toward the pips calculation. The pips and points calculation is actually the bedrock of every risk management system in the trading industry, and once you know how to calculate these pips and points, the rest is a walkover for you. However, I'm going to give you guys a very simple formula to use to calculate the pips movement. All right, so now before you do this, you have to know the assets you're calculating this pips value on. There are some assets that have 5 digits. Those assets, their pips calculation starts from the 4th decimal. All right, so now let's take for example Euro USD, which has 5 decimals plus the pipettes. Now the pipettes is this raised to power, which is a 5 around here. That's what we know as that is what is known as the pipettes. All right, so now we're going to be making use of the 4th decimal, which is where our pips calculation actually starts from. All right, so now let's do the calculation. So let's take for example we have Euro USD, and the current price value of Euro USD is 1.0920, and remember we are doing the calculation from the 4th decimal. Alright, so now after analysis you discover that Euro USD moved 20 pips bullish. What is going to be your new price value? It's as simple as ABC. All you just need to do is follow this formula. First of all, you're going to multiply your pips value with 0.0001 multiplied by 20 pips is going to give you 0.0020. Now add this 0.0020 to the previous price value, which is 1.0920, and the new price value is going to be 1.0940. all right, that's what's going to be your new price value if Euro USD moved 20 pips bullishly. All right, so now let's take for example, after your analysis you discover Euro USD is going to go bearish 50 pips from your current price value. What's going to be your new price value? So all you need to do is follow the formula. You multiply 0.0001 multiplied by 50 pips, which is going to give you 0.0050, and subtract it from the figure, from the previous price value, which is 1.9020, and your new price value is going to be 1.0870. all right, it's that simple. It's as simple as ABC. Alright guys, so now let's take for example, now we have other assets like the GBP JPY, the USD JPY, and Euro JPY as well. Now how do you calculate the currency, the pips value for these assets? Since the price value for these assets are not up to 5 digits. All right, so now how do you calculate these assets? Let's take for example GBP JPY, right, which have a price value of 187.916. One thing you need to know with these assets or currency pairs that have 3 digits after their decimal is that their pips calculation actually starts from the second decimal. Alright, so the 6 is actually the pipettes, while the 91 is the pips value. So now your pips calculation starts from the 1. Alright, now since GBP JPY moved 10 pips from its previous price value, all you need to do is use the formula and do the calculation. But now the difference with the formula now is going to be, instead of you using 0.0001, the difference is that it's not going to be 0.0001. Now it's going to be 0.01, right, plus times the pips value. All right, now let's solve this example right here. All right, so now you could see right here that multiply 0.01 times 10 is going to give you 0.1. Then you add it to the previous price value, and remember we're not going to make use of the pipettes, so we're going to be using 187.91, and your new price value is going to be 188.01. all right, now that's how you calculate pips for currency pairs that has 3 digits after the decimal, including the pipettes, right? So now let's take for example you did your analysis and you discover that GBP JPY moved bearish 20 pips. Now all you need to do is multiply 0.01 times 20, then subtract it from the current price value to get your new value. All right, if you do the math, you realize that if you multiply 0.01 times 20, which is the pips value, is going to give you 0.20, and now if you subtract 0.20 from 187.91, it's going to give you 187.71. all right, now that's going to be your new price value, right? So now let's take for example you're trading assets like gold or any metals or indices, and like the US30 and the Nasdaq. Now those assets don't move in pips, right? They moves in points. Those assets moves in points, and now these points, 1 point is equivalent to 10 pips. However, I'm going to show you guys how to calculate price movements in these assets like the metals and indices. And the metals, I'm talking about the gold, silver, and indices, I'm talking about the US30, oil, Nasdaq, and so on and so forth. Alright guys, so now the easiest way to calculate price movements in these assets is knowing this simple formula: 10 pips makes 1 point. And now if 10 pips make 1 point, then the formula for calculating this price movement is 0.1 multiplied by the pips value. Now note, I said pips value because we're going to calculate it in pips to make 1 point. All right, so now we multiply the pips value to get 1 point. So now let's take for example, after your analysis you discover that price actually moved 100 pips bullish from the current price value of gold, that's 2440.33. what will be its new price value? Now all you need to do is understand that now 1 point in gold makes 10 pips, right? So since 1 point in gold makes 10 pips, 10 points is going to make 100 pips, right? So now let's do the maths. You're going to use this formula right here, which is 0.1 multiplied by the pips value. All right, so now you just need to do is multiply 0.1 times 100, and it's going to give you 10. Now now after you have this 10, what you need to do is add these 10 points plus 10 plus the pips value, which is 2440.33. 2440 points. Let me just take this up. 2440.33, and it's going to give you, so your new price value is going to be 2450.33. all right, now that is going to be, so now all you need to do is add this 10 points plus the previous price value, which is 2440.33, equals to 2440.33, and it's going to give you 2450.33. now this will be your new price value. Remember I said 1 point in gold makes 100 pips, and this just proved that all you just need to do is do the maths, and it's as simple as ABCD. Right, same way you calculate your gold price value, that is the same way you calculate your US30 and your Nasdaq. Alright, so I don't want this video to be too lengthy because it's already lengthy already, so that's why I'm not going to go to the US30 and the Nasdaq. But then the same way, you just know that the same way gold move, that is the same price value at which Nasdaq and US30 move, right? They move in points. All right, so and 1 point makes 10 pips. All right, so you just do this maths and you get your price value. All right, guys, so thanks for staying to the end of this video. If you actually watch till the end, trust me, you're going to learn a lot from this video, and then this is going to help you whenever you want to put your take profit or your stop loss. All you need to do is add and subtract, and you got your answer. Now it's not rocket science, it's as simple as ABC.